Good afternoon, Patriots, and welcome to the 207th audio chat on the QNewsPatriot Rumble Channel series. I'm the QNewsPatriot, joined again today by metals expert and We the People financier, Dr. Kirk Elliott from KEPM. My name is SG Anon. Patriots, it is a truly remarkable time as we watch the geopolitical shifting and changes in the broader worldwide space and how they're affecting things domestically right here at home. As we look at the last 90 days, I think it's very obvious for anyone who paid attention that foreign policy events really do have an immediate and significant effect on things that happen in our neck of the woods as well. Dr. Kirk is very fond of saying fundamentals always hold true. We now have a memorandum of understanding coming out of that 90-day conflict that it's run right around 90 days at this particular point in time. And he's here to tell us a little bit more about what those fundamentals might actually mean for the near and midterm future. Dr. Kirk, thank you very much for joining us again on QNP.
Oh, it's so great to be with you.
Well, it's good to have you back, and I'm extremely excited to hear your breakdown about how markets are responding right now to what's happening in the broader Middle East region and in West Asia. You're looking at this memorandum of understanding that's come from the Iranian side that's clearly created consternation. I would call it even like whack-a-mole, areas of tension around that area of the world. Now we have one much, much closer to the Israeli border. We have Turkey now in the fray with some rhetoric, Saudi Arabia seeming to hold pretty neutral and level amidst all of it. So what are your thoughts, if you don't mind, if we can open the show that way today?
Well, it's interesting. Since February, when this Iranian conflict started, there's been a lot of misinformation slash disinformation coming from Wall Street to Main Street, right? And so that's impacted the markets. And that misinformation is, when there's conflict, the price of oil goes up. And this one in particular, right? Because the Strait of Hormuz was shut down. So oil supplies, fertilizer, a lot of things couldn't get to the rest of the world, right? And you think, okay, it's only been 90 days. However, that backlog, let's just talk about fertilizer, for example. When there's been 90-day backlog and it's going to take, estimates are up to 270 days to clear up that backlog. What does that mean for food crops globally, right? You miss the growing season with one of the major suppliers of fertilizer in the world, which means lower supply because the yields on crops are going to be less. And so you're going to have foodflation. It's not only oil that was going up, right? But here's where the narrative coming from Wall Street is focused on the wrong thing, in my opinion. It's one thing, but I think it's the wrong thing. And that is when the price of oil goes up, it's the most important commodity on earth, right? It's used in everything, whether it's this shirt that I'm wearing, to grease the gears and the looms that make fabric, to transportation, to plastics, to you name it, oil is used. So oil is used by every country on earth and every person in every country on earth. So it's a very important commodity. The second most important commodity is silver, given the state of the world and everything that we're doing, whether it's solar power, electronics, AI chips, cryptocurrency mining, nuclear, it all uses silver, right? So to me, silver is the number 2 commodity on earth. So when you look at supply and demand, did the demand for silver actually go down during the Iranian conflict? It's like, no, it didn't. In fact, I would say the opposite is true. It's increasing. Right. So then why did it stop? Why did the trend from last year, when silver went up 147%, why did it stop if fundamentals didn't change? Well, because there was noise, right? I would look at the Iranian conflict, even though it's much worse than noise because war is awful, people die, right? But from an economic standpoint, it was noise because the only thing that paused, not stopped, paused the bull market in precious metals was this Iranian conflict, right? And so what's the narrative coming from Wall Street? Oh, we can't lower interest rates. We've got this high inflation coming from oil. So therefore we have to raise interest rates, right? Or keep them steady. So that's been the narrative. And this is the story that's been on every financial news program for the last 90 days is interest rates matter, right? The interest rates are, during times of rising to high, steady interest rates, gold and silver don't do very well. And to me, that's a false narrative because they're these stories are being portrayed by traders, not like traders in the sense of, they're trying to do harm. Traders in the sense of they're day traders. They're trading mentality when it comes to investments. You watch a financial news program and it's like, okay, look at this stock tip that we have today. You need to act on it, right? And then, oh, look at this stock tip. You need to sell instead of buy. And so people are traders. But to me, when you have volatility like you have right now and have had for the last 90 days, these crises spell disaster for a trader mentality, but spell opportunity for an investor, right? Because it caused the price to come down because of that narrative. But the trend only paused. The fundamentals behind the trend never changed. So therefore, you can view this correction in prices in precious metals as a buying opportunity. It's an opportunity, not a crisis, right? The crisis bred opportunity. The crisis didn't breed disaster, right? If you were a trader, it might have spelled disaster. But for me, it's like, and you and other people who own precious metals, when the price came down over the last 90 days and consolidated and went sideways for a while, how much money did you lose? None, because you didn't sell it, right? So this is what we have to keep in mind. And if the trend fundamentally didn't change, then ultimately you're going to sell it down the road when the trend resumes. Now, why do I think the trend is going to resume? So let's take a step back in history, right? And I only want to focus on Middle Eastern crisis, right? That what's the main thing that goes up in Middle Eastern crisis? The price of oil, right? So again, that narrative that's coming from financial news networks. But you look at patterns in history during Middle Eastern crisis. This is what we're talking about, Middle Eastern crisis. Let's look at some confirmation patterns here, right? So the OPEC embargo of 1973, the Iranian Revolution of 1979, the Gulf War, 9/11, right, or in the early 2000s, even Russia-Ukraine conflict in 2022. Why do I bring them into the mix? Because there's so much oil and Russia is so involved in the Middle East, right? So during that time, whenever a crisis starts, and this is going to be counterintuitive, because normally geopolitical conflict, political conflict, inflationary pressures, uncertainty cause gold and silver to go up. But during times of conflict in the Middle East, the price of gold comes down at the beginning of those crises. Why? Because the world has looked at the US dollar during times of crisis as the safe haven asset. It's the blue chip of all investments, right? Because if people don't know what else to do, they've gone into the US dollar. That's been the case since the 1940s, Bretton Woods, when the US dollar became the world's reserve currency. The US is strong, it's mighty, it's got a great economy. And if all else fails, they're the world's reserve currency. They have a printing press. So you were never going to default, right? So that's why since 1944, funds have flown into the US dollar during times of conflict. When the US dollar is strong, the price of metals come down initially, right? Because of the inflationary pressures and because of this currency move into the US dollar. And that was no different now. But let's look at what happens when the conflict ends. Like what you just talked about. We have a memorandum of understanding. Conflict is ending. The Strait of Hormuz is opening up. Trump is probably going to remove some of the targeted tariffs on that region, right? So conflict is over unless Israel and Hezbollah continue to go strong at it, and at each other's throats. And then that could put a kink in things, right? But for all intents and purposes, Trump basically put an end to this thing. What happens to the price of gold after a Middle Eastern conflict ends? It ultimately reaches an all-time high. Not just higher than it was before the conflict, an all-time high, right? So in gold and silver tend to track together. Silver has this one layer of demand that gold doesn't have, and it's an industrial metal. Gold isn't. Gold isn't necessarily used for anything other than a hedge. It's a hedge against inflation. Central banks are allocating into it like it's nobody's business because the world has shifted. This isn't like any other time period where there's a Middle Eastern crisis, where it's this pendulum shifting moment away from central banks as we know it, creating fiat money, to a world where central banks are allocating into gold to be a backdrop to their currency, right? And we can go back to Basel III Accord, right? What did that international agreement say about gold? Well, we're going to make it a tier one asset, right? Basically on the same playing field for lending between countries as actual currency. See, central banks don't look at gold as a commodity. They look at it as a currency. How do we know? Well, because if you look at the international monetary system and people think, okay, the Japanese have the yen, Europeans have the euro, the US has the dollar. International banking shouldn't be looked at, I should say, as a system of different currencies. The international banking system views assets as collateral. Why? Because they lend money. You can't lend money if you don't have the collateral to back it up. So what are central banks doing? They're looking at something that actually has true value, gold, so they can lend against it and do what banks do, which is lend money. This is why central banks around the world are allocating into gold, right? So let's go back to these historical patterns, right? After the crisis are over in the Middle East, let's look at the 1973 OPEC embargo. What happened to gold after that ended? Within 7 years, it was a 4-digit percentage increase, like literally up over 1,000% after that crisis was over. You look at what happened in 1979 Iranian Revolution. When that was over, gold rose by over 90% in 1 year. This conflict is eerily similar to the other Middle Eastern conflicts. Why? Because oil is involved. So now we've got this pickle, right? We've got this pickle that gold and silver should now rise and rise a lot because the conflict is over. But yet it didn't. Why didn't it? Well, because Kevin Warsh comes in as chairman of the Fed, and he made this extremely hawkish announcement on Wednesday, which is hawkish means they think the inflation is coming and they've got to have Federal Reserve policy to slow down inflation. So he said, you know what, down the road, I know that I've said in the past, now this is my paraphrase of him, is, yeah, we need to lower interest rates, stimulate the domestic economy. This is what Trump wants, which is why Trump probably put me in this office. He lobbied hard for me to get this job. But what did he do? He did a 180. He said, you know what? Next year, we're probably going to have 2 rate increases because of these inflationary pressures. Is he wrong? Not necessarily. You have to raise interest rates to slow down inflation. And like what we talked about, you've got food inflation, oil. Now, oil came down when this conflict is over, right? But ultimately, you go down the road, the narrative, SG, is going to shift from people listening to the interest rate story on how gold and silver don't do well when interest rates are high, to the other side of that token, so to speak, which is, what is the other thing that causes gold and silver to go up? Inflation. So same reason, right? But people are going to start looking at the real fundamental forces. All things go up with inflation because you use money to actually buy things. So things can be eggs, can be groceries, can be bicycles, can be gold and silver, can be oil. Ultimately, in times of inflation, things go up in price. Well, what are gold and silver? They're things. Right now, you look at the demand. You look at the demand for silver, it's going up a lot. It's going up because of AI chips, cryptocurrency mining, nuclear, everything that we talked about, right? But it's not like aluminum that you can recycle silver, right? When it's used. When it's used, it's done. Right? So there's this limited supply, and the supply is diminishing, demand is increasing. That means ultimately prices go up. So in the end, I think after this volatility of these two counteracting stories, Kevin Warsh and wanting to be very hawkish and raise interest rates, you look at the inflationary pressures and supply and demand of gold and silver. I think
it's a perfect storm.
Well, it's a perfect storm, and people are going to ultimately start to look at the real reason why gold and silver go up, which is political instability and supply and demand. We still have that, right? So as soon as this narrative shifts and gold and silver start to go up, what does that mean for us? With an investor mentality, you buy in on this dip. This is an opportunity, not a crisis. It's not like the trend has changed. It's not like if fundamentally there was no demand for silver, AI chips go away, cryptocurrency mining goes away, that we go away from nuclear power to something different, like nobody uses electronics, well, then there would be no demand. We don't have that, right? So you look at this, and now there's a couple other big things that we should probably discuss. Number one is let's stay on the technical side for a moment, right? Because everything I always talk about is the fundamental forces that make a chart look like a chart. Right? It's the things that we're talking about: interest rate policy, geopolitical conflict. All of that causes something, if you're looking at it in a picture on a chart, causes things to go up or down. A chart doesn't make things go up or down. It's fundamental forces that make things go up or down. So you look at that and you think, this is really interesting, but let's look at the chart side of it. So if you look at a technical pattern on a chart, you have things like moving averages, 200-day moving average, 50-month moving average, which let's talk about the 200-day moving average. It's the average price of whatever you're measuring over the last 200 days. So if the price goes up, you know, that moving average is going to be trending upwards, right? Because it's an average price over the last 200 days. So we got to silver at really an overbought status when January 30th, when it was 120 an ounce. It was overbought. It corrected. Where did it correct down to? To where we are today, the 200-day moving average. So that's the average. And historically, when you have something that's overbought, it wants to correct to that moving average. It did it. It dipped right below it. And what happens? So here's kind of a key technical point. If that moving average is going up, that means we're in a bull market. The overbought status has been rectified. You hit the moving average, and then it starts to bounce back up because the bull market didn't stop. It's continuing to grow. Now, if the trend is coming down, right, it's declining prices over time, and the trend is coming down, and you come down and hit that 200-day moving average and you dip below it, it's like, look out below. If you dip below that moving average in a downward trending market, it could keep going and going and going down. That's not what we have, right? So we have fundamental buying opportunity. We have a technical buying opportunity. There's also one other thing that we need to look at, right? And that is the stock market, right? So with all these fundamental forces, Dr. Kirk, that you're talking about, right? Why hasn't there been a mass exodus out of things like stocks and bonds and everything else into precious metals? Well, I would say there has been an exodus for sure, because the price of silver has gone up, the price of gold has gone up, but there hasn't been a spark that would really cause somebody to say, we're dumping our other asset classes and going full bore into precious metals. What is that spark? I think it's coming. Because if you look at just last week, for example, the S&P 500 hit an all-time high. And literally an all-time high. So gold and silver have been going up, the stock market's been going up, and people have said, no, we're not going to really like move from one growing asset to another. There hasn't been the urgency to do so. But I think that's coming. Because if you look at the fundamentals of the S&P 500 hitting an all-time high last week, how many shares are there in the S&P 500? 500 of them. That's what it means. How many of those 500 stocks actually hit all-time highs? 20 of them. 20. So it's a very thin bull market. It's not this If 400 of the 500 shares SG had hit all-time highs, I would say this is a very robust economy. This is amazing. 400 of the 500 shares hit all-time highs. The economy's booming. It's growing. No, it was only 20 of them. What are the makeup of those 20 stocks? They're AI stocks, right? So all this talk about AI and Claude and Chat GPT and everything, people are even moving out of crypto and they're going into AI shares, right? So you've got this irrational exuberance causing stock market indexes to hit all-time high, but it's very thin bull market. It's AI shares that caused it. So let's put that into perspective. Remember 2000, tech stock bubble, right? So the tech stock bubble, it was the emergence of the internet in 2000, right? It doesn't seem like it was that long ago, but the internet had barely existed back then. And everyone was saying, oh, the internet's the wave of the future. And it was this irrational exuberance. And on that all-time high, how many stocks hit all-time highs? 20 of them, the exact same number. So that was a very thin bull market as well. Well, what happened? That bubble popped. 20 of those shares, which is what caused the all-time highs back then, the bubble popped. And what did tech stocks do following? An 80% correction, 80, right? So what are people like Michael Burry from The Big Short, right? They made a movie about him. He was such a good trader. He said, this is so scarily similar to what I've saw in 2000. Very thin bull market. I think this bubble is about to pop. He thinks that the AI stocks are about to pop. So is Jeremy Grantham. So are so many of these billionaire investors saying that this market is overbought. It's irrational exuberance. It can't sustain this. Well, look at SpaceX, for example. Largest IPO in history. It made Elon Musk the world's first trillionaire last week. Trillionaire, right? This is an irrational market with these extremely high valuations. When that bubble bursts, and it doesn't take much for that bubble to burst because it was only 20 of the 500 shares that caused its all-time high. Well, we've got a problem. Now there's going to be a mass exodus. What are people going to go into? They're probably going to start going into gold and silver, right? So here you look at everything that we're seeing. It's like whether it's technical, fundamental, you're going to have a spark that's going to cause even more of an exodus into metals. And you see the prices going up. This is an opportunity, right? So if you go back to a show that we did a few months ago, right? We talked about this a few months ago, and we talked about it's not only me as a commodities expert. I mean, it's what I do every single day for decades, right? I think silver was going to hit 180 to 300 by the end of the year. Did I change my tune? Nope. May have been delayed a couple of months because of Kevin Warsh's comments and this war conflict in Iran, but I still think we're going to get there. You know who else thinks that? It's not just me and other, people like Michael Oliver or Andy Schechtman or people that are talking about gold and silver. Bank of America, big, massive bank, thinks that silver is going to hit $309 by the end of the year. $309. Goldman Sachs, JP Morgan, all over $150 by the end of the year. So when the Iranian conflict started, did they change their tune? Did they say, oop, we called this one wrong, right? It's like we actually want to change our assessment. Maybe silver is going to hit $50 and go down between now and the end of the year. No, they didn't change their tune. Why? Because they know the same fundamentals that you and I are talking about. When a crisis ends, metals ultimately go up. They didn't change their forecast, SG. Neither did I. So what this means is it's not just people that talk about gold and silver all the time on podcasts and news programs and on the internet. It's big, massive banks because they look at supply and demand as well. And they know that this is a paradigm shifting moment in history. And from a currency creation perspective, the global economy with these higher for longer interest rates is not doing well. It's truly not doing well, right? Because there's so much debt. Like if we had no debt, who cares if interest rates got to 20%? It doesn't really affect you. right? But if the world has debt and interest rates rise, your debt service goes up, your payments go up, it's a big deal. And so countries can't tax their way out of it. The global consumer is already taxed to the hilt. They're taxed to the point of you raise taxes anymore from this point, people are going to curtail their spending. They're not going to spend as much, which means government revenues come down, sales tax revenues come down, income tax revenues come down, everything, right? So you're looking at what is a country going to do? They're going to print. They're going to print their way out of it. That's very inflationary. That's a debasement of the currency. As countries continue to print, they debase their currency. That causes more inflation. Again, the narrative is going to shift from interest rate policy to the inflationary story. Again, supply and demand. Use this opportunity to not just help your financial future and solidify yourself with the gains that are coming. Use these historical patterns, these historical technical patterns, to use this as a buying opportunity, because fundamentally the trend is still there. Supply is still low, demand is still high. The only thing that caused gold and silver to pause over the last 90 days, and again, I say pause, not stop, paused because of the noise coming from the Iranian conflict. To me, it's just noise. Whenever we make a decision, you should use sound judgment, fundamental reasons, right? And stop acting like a trader and start acting like an investor, right? Because when we invest for retirement, it's for the long term, it's for the medium or the long term, right? It's not, we're not day trading in and out of these things. Pretend like we're talking about kids, right? When we're raising our kids, it's the best investment that we can ever have by spending time with them, investing into them, teaching them, growing them in knowledge and wisdom, right? And so if they have a bad day, not getting rid of your kids like a trader would, right? You just say, okay, I've done my best. I'm investing. And in time, this time that I spent with my kids, it's going to bear fruit and they're going to be amazing adults, right? That's how you should look at investing, is you're doing the right thing at the right time, looking at this fundamental strength, and in time, it's going to bear so much fruit.
I have to say that's one heck of an overview, if there ever was one, Dr. Kirk. And there's so much to unpack with that. But I'm going through this article right now from Reuters. And the audience out there, if you'll bear with me, I'm still dealing with some health things on this end. But one of the things that struck me about this article pretty significantly, and the title of the article for folks that would like to read it, Iran peace not stopping central banks from raising the costs of borrowing. Correct me if I'm wrong, because I'm not the expert here, Dr. Kirk, you are, but isn't, when in a situation where the central banks are raising borrowing costs or talking about raising borrowing costs, there is some sort of systemic overcompensation that has happened. And that balance has to be restored, or a true reflection of that cost of living versus wages versus cost of goods and services can't really be achieved. How do you think that this situation with the central banks factors into what we're talking about a moment ago? And if I may add to that, could this be an indirect confirmation that access to precious metals around the world is perhaps not as readily available as it once was?
No, that's true. It's not as readily, especially on silver, right? Because silver, it's an industrial commodity. It's used, and all of the demand factors that cause companies to want to buy silver, whether it's Sony or Samsung or Tesla or whatever, right? That's only increasing. So there is limited supply, but you look at what's happening in Asia right now. After, if you listen to enough mainstream media, financial news, you're thinking gold and silver stink. It's like nobody wants it, right? Look at this. It's come down since its high in January. And now Kevin Warsh's comments, blah, blah, blah. That's what we talked about. That's their narrative. What is happening in Asia? The demand for gold via gold ETFs is skyrocketing. They're gobbling up gold. They're not listening to the Western financial media nonsense, because they know that the world is shifting, and this paradigm shifting moment away from central banks, fiat-based money creation, and debt into something that's going to be real. Again, because central banks especially view their assets as collateral, not currency. Currency is not an asset. That's the mechanism of trade. But how do they lend money? They have to have collateral. This is why central banks are gobbling up gold. Central banks don't really buy silver. Central banks buy gold because of the price point, and they're buying it in huge, massive increments, right? So if they were to buy silver, silver would absolutely run out. It's not expensive enough for a central bank to allocate into it, but they're allocating into gold. Gold and silver tend to rise together. So take advantage of the lower priced one, which is poised to outperform because the extra layer of demand. This is why, as a wise and prudent investor, what's our goal? Buy low and sell high. When the fundamentals that are causing the growth are still there and getting more mighty all the time, like a heavier weight is being put on fundamentals rather than a trading mentality news story, allocate into that strength. That's where safety comes. And safety also comes from getting out of the asset class that's near a historical top, that has outperformed what it should, like the stock market. Irrational exuberance. The revenues aren't there. It's not like you look around your neighborhood and everybody's spending money like drunken sailors, right? The stock market isn't necessarily going up because you and me are spending so much money. Stock market's going up because people have pulled money out of other asset classes to take advantage of this AI phenomenon. That bubble, I believe, is about to burst because it's irrational exuberance. Doesn't make sense. You can't sustain those price levels. So therefore, buy low, sell high. If it's high, you should get out of it. Lock in your profits while they're there and go into something that's growing for strong fundamental reasons.
Very sage advice. And it takes me to my last question for our call today, Dr. Kirk, and that's with respect to this transformation of the worldwide economic landscape. You know, you and I have talked about several different times how things like precious metals, if for no other reason, there is this transformation that is occurring. There is this shift that's happening in the way markets are valued. And you're seeing some of that in South America and certainly in sub-Saharan Africa with the disconnect from Washington over the last 5 years. But with respect to all of that, historically, blending economic systems or transforming economic systems to the level that we're talking about, to the scale that we're talking about, especially planet-wide, it's really never been done before simultaneously. But regionally, when we have examples of it historically, there's often a real hesitance, a real resistance to getting economic systems of different points to come together on one standardized understanding. And a lot of times it required conflict in order to settle those disagreements and those points of contention. If we get this right in this present day and age, and this is only the opinion of this podcaster, but if we get this right, I think it stands to be the first time in history that we've ever accomplished something on this scale collectively as a relatively unified humanity worldwide. So my last question for you is twofold. It's a little bit speculative here. I think it would be fun to daydream as we close out the call today. Can we accomplish something as noble as that actualization, getting this system completely reintegrated worldwide in a way that is truly fair and balanced from, you know, one segment or one region or one locality to the next? And if so, what does that moral high road look like for KEPM?
I mean, I think that how you collectively get to that point is central banks around the world looking at gold as collateral. You can look at the signals, right? So that just means you put these pieces together. Basel III Accord made it a tier one asset. Central banks are allocating into it. The central banks see trouble down the road. How do we know? Because over the last 2 weeks, they've started to repatriate their gold again. They don't trust their gold being stored in Western vaults, and they're wanting it to come back home to roost. They're pulling it back into their own borders. Why? Because they know they're going to need it as collateral. Why? Because they see a financial change coming, a monetary system, a whole order change. This is my opinion, right? But you don't pull something back that you already own unless you think somebody else is squandering the opportunity. It's not going to be there when you need it. So they're pulling it because they're going to need it for something. They're wanting it shipped back home, right? Into their own countries, into their own boundaries. Now, how does this look moving forward? Well, fiat-based money in central banking, as we know it, is broken. It's just broken. So it's got to be fixed. What is it going to be fixed with? Right? A gold-backed currency by central banks? Probably, because what's the common denominator? You could have all kinds of different currencies backed by one asset. What's the common denominator? The one asset, right? It's gold. You allocate into the commodity that the world needs for order, right? Or maybe we're not going to go into gold-backed currencies per se, but the new order is going to be digital money, cryptocurrency, right? But what are some of the big movements happening in the crypto space? Getting away from like things that might not have value, inherent value in and of themselves, like a speculative crypto company, to something that's real world asset, tangible backed tokens, whether it's a gold backed token like what Tether has bought more gold. They're now, outside of a couple central banks, the largest purchaser of gold on earth, largest holder of gold on earth. And it's a company. What are they doing? They're backing a token with gold, right? So here again, whether we go digital, whether we go central bank backing their currency with gold, what are both of those two elements doing? Backing something with a tangible asset. That tells us that the world is now thinking, we don't trust the government anymore. We don't trust the bank anymore. This is why people invest into crypto, because they want growth and they want something that's out of the system, right? That's why people generally invest in crypto, because it's on distributed ledger, decentralized blockchain, right? So why do people invest in physical, tangible gold and silver? Because it's out of the system and it provides growth. See, the fundamental forces causing both digital and tangible asset movement up are the same forces. It's safety, it's growth, and it's get out of the system. Both crypto and tangible gold and silver fulfill that same category, right? Some people are going to say, I don't like digital money. I don't trust it. I don't have it. So then they go with physical. And some younger people say, I don't want physical gold and silver. I'm going to buy it in tokenized form. But still, we're moving into this environment where that's the common denominator. That's how collectively you can take advantage of this movement, is look at what central banks are starting to allocate into, and don't invest into the currency, invest into what they're allocating into. That happens to be precious metals.
Fantastic overview, as always, Dr. Kirk. Thank you very much for joining me again for the show. How can people reach out and learn a little bit more and perhaps get some guidance on these issues if they would like to?
You can do one of two ways. You can just call us, 720-605-3900, and just say SG sent you. Or you can go to the webpage that we put together for you, kepm.com/SG, and just type in your information, and one of my team will call you, answer your questions, help you devise a strategy to safeguard your assets using tangible assets like silver and gold to take advantage of this global situation rather than letting the global situation take advantage of you.
Wise words. As always, Dr. Kirk, thank you for a fantastic conversation. For the audience out there, if you'd like to learn just a little bit more, you can navigate to the links in the description box down below today's video. This is SG Anon. I'll be back with each and every one of you again soon on the Q News Patriot Rumble. God bless everyone. Stay safe today, and thanks. Bye-bye.